Okay, guys, good evening from here. So today, we I'm going to talk about confirmation with the algorithm theory range. So you already know what I have explained previously, um, algorithm theory range, and also how you get to find a confirmation that the algorithm is wanting to shift structure, right? So also, I'm going to show you guys everything and how you can use that as a confirmation to execute the trades on your chart or your trades. Yeah. So remember previously we talked about GBP USD. I think the last video I uploaded about algorithm due range, the core content about algorithm due range. And remember when I talk about the structural shift after price has taken a previous month high or a previous month low, you always get to find a confirmation entry at that given area. So let's just say that we're having a um, previous previous month high right here, and price traded higher and gave us a stop hunt. Now you should always remember that this stop hunt right here is only confirmed if it breaks a structural low, and that structural low should be a major structural low, an external low, the low that was responsible to break this high and print for you this new high. So that should be a stop hunt and also a break of market structure. So you're having another block printed right here. So because the other block is printed after a stop hunt, and you know a stop hunt is something like this is not considered a break of structure. Alright, so since the body of the candle that broke that high, that took liquidity from that high, did not close far away from that high, just very low or below the low, then it means that um, yeah, it means that you are confirming a stop hunt, but then it is only confirmed after a break in market structure or a change of character. So now after that, you know that the next thing you have to do is to do what? Conduct your liquidity assessment. So you conduct a liquidity assessment and expecting price to take the liquidity, tap your other block, and then follow your directional barriers. So that's the confirmation entry that we always get to have on our algorithm range. So we can have an example right here. So right here you can see that GBP USD has been bullish, and you know I've already predicted you guys GBP a long time ago. I think that was last year or around January, that GBP will be going higher and will be targeting this area of long-term area of resistance. So that would be where we will be targeting. And the reason why I say that is because this is a long-term deal range. This is a range market. And what did the price do? The price sold down to take out support. So what it did right there is that it hunted that liquidity pool. So it grabbed that liquidity pool, and on our daily time frame, we get to see the structural shift where we're having a higher high and higher low. So if we go back right here, you can see right here we have higher high, higher lows, and we have this confirmation entry right here. So I've already shared the videos about this, and now we're going to look at the current D range that are called right here. Now, since our bias is that the market has to be bullish, and the D range started, so you know that what we'll be having to see is the algorithm should take out previous month low. Now, not just only previous month low. Remember when I first started about teaching about the algorithm D range, I also made mention of price taking out previous 3 months, the lowest low in previous 3 months low, and also we have the highest high in previous 3 months high. We also have the lowest low in previous 6 months low, and also the highest high in previous 6 months high, and that also for the 12 months highs and lows. Now what we actually see here is that this candle right here, we have previous 3 months right here, and you know what I always concentrate more is on the previous month low. So we can still also mark the previous 3 months highs and lows, the highest high in those high and low. And right here, this is the highest high in previous 3 months high. We have equals right there, and also in the lowest low of previous 3 months, we have this low right here. So this is the previous 3 month low. We have 1, 2, 3. So these 3 months. Now you can see the price trade lower, taking liquidity from where? Previous 3 months low, right? And also, like, it took liquidity for previous 2 months low, and also previous month low. So that is the lowest low in previous 3 months. All right, the second month is the lowest low in previous 3 months. So seeing what happened right here, you will know that you had a word, that you had a stop hunt, you have a liquidity grab on that low. And right here we can see that on the daily time frame, the price created a compressed liquidity, a compressed structure right here, and that was where we have it trade lower, grab liquidity from previous month low, and you can see that this right here is an area of support. So I'll get to talk about confirmation of other blocks, but that will be next time. So we also trade lower to take out previous 3 months low right here. You know, this is a liquidity grab. So we hunted the stops on that low, and we now see it rally higher, right? Now if you notice that when it rallied higher, we had a structural break right here. So this is like a break market structure, and on the 4 hour it did grab liquidity from previous another high right here. So we're having a 2 confirmation trades. Now this right here, you can see that sell candle that were responsible to take liquidity and also break structure. Now when you come about confirming another block, like I always say that everything about smart money concept is to grab liquidity and withdraw to liquidity, right? So a confirmed order block is the candle that was responsible to take liquidity, all right? Either it takes liquidity from the sell side or it takes liquidity from the buy side, and also we now see that structural break that we're talking about, right? So when you talk about the other bullish order block, that is the last candle that breaks structure. That is what they'll tell you, right? But the real thing is that that last candle, did it grab liquidity before it actually breaks structure, right? So we're having liquidity pool right here. Now in the mindset of the retail traders, they are buying at the area of support and they are having their liquidity resting below here, right? Now price respects them, starts to buy, and it gets to a certain price level. The smart money, they have to push this price down. Now when I talk about smart money, I'm not talking about us. We are all retail traders, all right? Now the people referred to as the smart money are the banks, the hedge funds, and the big boys. You know, those that trade with the hedge funds. Let's just say the hedge funds and the banks. So they executed the sell so that they could grab the liquidity right here, right? Now this is the point where retail traders come to ask the question that why is price hunted at stop loss before it goes that direction? The reason is this: because you're having pool of liquidity right here, so they'll have to sell the market to take that liquidity, to take that pool of money that's resting right here before it push price your direction. So in this case, the sell was executed and it grabbed the liquidity, and now the breakout traders also those traders waiting for a break and retest are waiting for price to retest so that they could sell. So price retest them and sold for Y, and probably to still hunt this low, or you just get a failed low and you now see rally higher. Okay, now sorry, I'm not started talking about what the main subject, but it's very important you know what another block is. All right, so now we have taken liquidity from where? Sell side, and we have break structure. That means it deliver price to a draw to liquidity, which is liquidity resting on this high. We have the buy stop resting on this high also. So we have a structural break. Now that last candle, that is what you're going to be marking as your order block. The sell candle that was responsible to do what? Grab that liquidity before we see the price impulsively rally higher. They quickly pump money into the market to push this price higher. That is when you get to know that the smart money are now inside the market. So they pump the money, they pump the price, and they break structure, and you have the confirmation that yes, price has shifted its direction, and you have the confirmation that yes, this is the order block. If there is no structural break, then you are not confirming that as you're not confirming that has another block. You must have a structural break from your external high. So that's why I always say that we make use of the higher time frame, and the least that I can use to confirm my structural break is from my 4-hour time frame. So that's by the way. Now price grabbed that liquidity from support and also took our previous 3 months low, and we now see rally higher. Now this right here is the other block. Alright, that was the second candle that was responsible to do what? To take out liquidity and also create an impulsive rally that traded higher to break structure. And if you could remember, going back previously on my Facebook page, I shared this analysis with you guys that we are going to be buying GBP USD, and this was the point. I predicted this market and I drew the structure for you guys, and that's what we see happen. And I say that we're going to be taking profit an area where we have liquidity pool, and that is the previous month's highs. So price traded lower, and we say to mitigate our order block. Now on the 4-hour, this will be seen as a breaker block. So we run down to our 4-hour time frame, and what happened? You can see right here the price actually trades backwards to the 4-hour order block, like a breaker block. Now this right here, based on you on the lower time frame, you don't actually know how to read your structure. You don't actually know when the market is at the daily range. You are looking at this area as an area of order block, and you're saying you have the breaker structure. This is a range market. This is a liquidity pool. From a higher time frame, this is not a structure. Actually, looking at this, and if you zoom out, you know this is not a structure. So pay attention to your structure. Know when you have in the daily range, know when you have in the bullish trend and the bearish trend. Alright, so this right here is the order block that failed, and price retraced backwards to it, and you're now having a breaker block. But the daily time frame, it is another block. Tap, and we now rally upwards. Now, talking about the confirmation of algorithm daily range is with the use of your Fibonacci. Alright, it is with the use of your Fibonacci. So when price happens to take out previous month highs or previous month low, taking liquidity from sell side, you are expecting price to break structure. And when you actually break structure, you're waiting price to retrace the Fibonacci level, and the Fibonacci level is at the 50%, the 68%, and also the 79%, 78-79% Fibonacci level. That is the places where you have to see the algorithm have reaction and create an expansion. And most of the times, always take note when you're having or drawing your Fibonacci, and you are marking the area of 50%, the area of 68%, area of 75 or 78%, you should make sure that you're also conducting analysis. And when conducting analysis, you know that your order block or your POI is at that level, is at that Fibonacci level. Alright, before you try to execute your trades. So right here we see the expansion, you see the structural break, first change your character and the breakthrough structure. Now price you trace to our daily time frame order block that was responsible to take liquidity, which is also a breaker block at the 4-hour time frame. So we mark our Fibonacci, we trade from the low, the swing low, the external low, and we measure trace to where we're having the swing high. Alright, so you can see that price we trace backwards to 50% of the Fibonacci. I choose the body of the candles right here because these are the areas where we have an equals. Right, so price you trace backwards to the 50% before it rallied higher and break structure. So remember, I made mention of the algorithm trading one-sided when it happens to be that it's trading at a daily range. Alright, it happens to trade one-sided, and you don't always get to have a confirmation entry. Alright, so the first one, now we now happen to have a breaker structure right here, right? And we have a swing high. So this is the high, this high right here. Right there, we take this high most of the times. And the swing low was this low right here. It was the low that occurred before we have the breaker structure and price traded higher. So this right here, this is our swing high, and we see first of all price retraced backwards to 50% before we ride higher again. After that, we mark our swing low right here. They're responsible to push the price higher, and we are now having a breaker structure right here. So we now mark our swing highs and lows. This is our swing low right here, and our swing high is right here. Sorry about that. So we select this. So you can see the algorithm retrace backwards to the 68. Okay, that is 0.61% level. So it's 61 Fibonacci level, or is it 68? I think that is 68. So we go to our settings, we look at it. We have the 0 activated, we have the 0.618 activated, and we also have 1, 0, and 0.78. So that is the 61% level. And price retrace backwards to it, and we now finally see a trade higher give us a break structure. Okay, so we're not having, all right, this is a confirmation, and you can see that it took our previous month high, right? But then it didn't give us a confirmation entry that it wants to go bearish. So we are still going to be using our Fibonacci to mark out POIs. So we have this high right here. Price retrace backwards to 68%, and it's maintaining that area since then. And we now see rally high again. So we mark a Fibonacci right here, and this is our swing high right here, this one, because this is where we had our breaker structure right here. So price retrace backwards to 61% level till it rallied to give us what? A weekly time frame higher high. So if we go to our weekly time frame, it's very important you always conduct your analysis. You can see that this is now our higher high and higher low. Now on the last video I uploaded on my Facebook page, I said to you guys that I want to be buying GBP USD. That is better I'm looking for a buy GBP USD and not for sales, because looking on weekly time frame, there's no POI to say that there's no bias to say that GBP USD is bearish. All right, there's no bias to say that GBP USD is bearish. So is rather that we're looking for a bias, because we are not having a stop hunt and high. So this is a higher high, higher low, higher high, higher low. So that means we're expecting a higher high. So that's the reason why I said we are not going to be looking for sales on GBP USD. And also let's go back to the monthly time frames so that we can also see the algorithm range that I call right here. So we have the swing high, and right here again we have the algorithm, the price due on a range, and it took our previous month high, right? So we run down to our daily time frame. This is right here. So this right here is our previous month high right here. So remember, the bias is bullish, right? So right here, this is right here, we have a previous month high taken out, and price trade higher, we have a higher low. So right here we have a stop hunt, and after that stop hunt we now have a breaking market structure. Now when price broke this low, it retraced backwards to balance the gap right here. So that was done on the 1 hour time frame. All right, so if we go to 1 hour time frame, you can see right here, after the structural break, it traded backwards to balance price and rally downwards. So we now start to do our use our Fibonacci to predict the price. So with our Fibonacci, we mark the swing high. Okay, let's first of all mark what I call right here. So this is the stop hunt, and right here is our Fibonacci. So it didn't retrace backwards right here, but you can note that the recent high is this high right here and not this one, because we have this swing high before it's rallied downwards to break structure. So this is the low right here. Now price quickly retraced backwards to what's the 68% Fibonacci level, which balance a liquidity void. So the Fibonacci is like a confluence when you do your analysis, right? So it balances liquidity void and rally downwards. All right, so we use a Fibonacci again, mark our swing high and swing low. Most of you guys will mark this low, but I would rather mark this one right here. So that is why I would rather be on the 4-hour time frame most of the time, dealing with the Fibonacci and the algorithm deal range. So we mark it right here, and price retraces backwards slightly above 50% Fibonacci level, but then it starts, the body of the candle is respecting 50 Fibonacci level. All right, we measure again this high right here, and this is our low right here. So price retraces backwards towards 61% Fibonacci level. We mark again, we continue marking this, and you get to notice that price is retracing backwards to this Fibonacci level I showed you guys. So this one we have it retrace backwards to the 78% level, and that 78% level is in confluence with an order block right here, right? So we mark, continue again, we have this swing high and we have the swing low. Price wicked through 68 and 78% level, but the bodies of the candle was respecting 50% Fibonacci level. So we mark again this high and we mark this low right here. So now this is the point where it starts to get interesting, and you get to confirm that the market is no more following your bias and is wanting to change its bias. So excuse me, sorry about that. So price retraces backwards to 50% Fibonacci level, right? And you'll be watching the price, so you get to notice that it traded lower, right? But it did not break structure. It did not break structure, right? So it now retraced backwards, and that was now where we have a structural shift. So we are now having a break, a change of character right here, and the confirmation was that we're having a shift in market structure. So if you also notice, it's the bias that it showed us right here that it's been bullish, right? So what it showed us right here is that it gave us a failed low, right? So delete this Fibonacci, look at it right here. So it failed to take out previous low. Now if you watch this market, if you watch the algorithm, you can see that every sell stop was protected for the idea that it has to go what, bullish, and the target is this long-term liquidity pool. So we go back to our 4-hour time frame, right? So the Fibonacci, watching Fibonacci, you can indicate that it failed to take out that low, so you won't be able to use the Fibonacci to say you are continuing to sell it, because it has now changed direction. So you're having what, a confirmation entry in conflict with the algorithm deal range that price failed to take out previous low, and when price fails to take out previous low, it gives you a confirmation entry of what, a failed low plus a break in market structure, which is what, a shift in market structure, right? So this was where I shared analysis with you guys in the mentorship and also on Facebook. You can check that on Facebook. If it happens to be I upload this on YouTube, those on YouTube, you can check that on Facebook. Price retraced backwards to lower time frame order block we saw, and this is why I shared the analysis right here with the mentorship that will be buying GBP USD. So you can see why I explained about order block. Price traded lower, took out sell side liquidity, right? This sell candle was responsible for that right here. The sell candle was responsible for that, so that is a valid order block. It's sold down to take out what, area of support before it rises higher to give us what, a change in character and also a break in market structure, which in confluence, this right here is a trade line liquidity pool, right? So it grabbed liquidity from trade line, so it's taking the stocks from that trade line and ride it higher to give us a confirmation entry, right? You can see that impulsive rally after the sell, and this right here, this other block is also a breaker block. Now an extra confluence to me is that I also happen to have a QNTR right here, has a confirmation entry as a confluence to the other block. Now conducting liquidity assessment, remember from the stat we see that Fibonacci tapped at 50% but failed to break structure, right? So that will occur right here. Okay, right here, it failed to break structure, and we now see that structure break right here. So we are no more bearish. We have now shifted to bullish because this is our external high that was broken, and we have a two structural break. Change your character and you break in market structure, right? So we have inducement right here. Price didn't go out higher to take this high. Inducement, we still have a fair value gap. We have another block right here, in which you will find, you will see that it also traces back to the breaker block right there. All right. So price tap it, and we'll now see rally higher to impulsively take out all of this liquidity that has been building up since previously. All of this liquidity, right? So we now say, okay, we have shifted our direction. So what we're doing again, we are now using a Fibonacci to start mapping out. We start mapping them out. But first of all, let's look at this one to see that it's in confluence with our entry. So we have this swing high, we have this swing high right here. So you can see that our order block is in confluence with the 78% Fibonacci level, 0.78%, and you can see that price tapped it and we now rally higher. We use a Fibonacci again since we now have a breaker structure. We use a Fibonacci, we map. Price trades to 78%, and I think that will be 79%. Also, you trace to, and also a confluence is that it is an order block. We have an order block for us right here. So price tap into there and rally higher. So those that would do a confirmation entry, we have this high and we have this low. Price white strike wicked through 78% level before rally higher. So this right here is our swing low. Okay, not this one, because it was responsible of, this is where the expansion started. So we map out our high right here. So you can see the price retrace backwards to what, 50% on right higher, and which is in confluence with what, our fair value gap right here. So it right higher. Now most of us, we are looking at this area to sell, and saying at this area is not valid because you are not paying attention to our golden deal range. All of this is what, liquidity. All right, this is not a structure. This is a liquidity pool. This is a compressed structure. All right, and there's no confirmation of what, the breaker structure. Not all of these. These are compressed structure. These are compressed liquidity. This is not confirmed as a structure. All right, so, and also there's no confirmation entry. This other block right here, because I know most of us will be trying to sell other block. This other block will only be valid if it traded lower to break this low. So we'll be looking for sales. But now our bias is bullish. Okay, we trace backwards to 50% level. So now we are now having a new swing high, a swing low right here. So we are patiently waiting to see if there will be a high that we printed, so that we'll know where the price will retrace backwards to. So let's do another example real quick, and we'll be looking at Euro USD. We go to order, and we predicted this market right here. So we also look at Euro USD. We go to a monthly time frame, and we're looking at our deal range. Okay, so interesting part about Euro USD, you can see that I have higher high, higher low, higher high, higher low. So price, let's say price took out this swing previous mode low and give us a low right here and a failed low. So let's just focus on this low. But by the way, if you go up to go down to the weekly time frame, you can actually see that this is a bullish structure. We have this high, we have this low, we have this high, and we have this other block right here. So price, you trace backwards to the other block. All right, and when you trace backwards to the other block, that was where it gave us a confirmation entry at the 4-hour time frame. You would note that all of this is not a structure. All of these are liquidity. All right, all of these are liquidity. This is a compressed structure. So we end up paying attention to our 4-hour time frame. So this one, I made a video on this one where we say this price failed to take out a previous month high, right, which is this one, and trade lower, trade higher, trade lower. So it didn't go higher anymore. So we now have a structural break right here. We use our Fibonacci, map it out. It trades backwards to 50% level. We start mapping out again. We have this high, and we have this low. So this one did trace backwards to 50%, which is fine, but it traded backwards to imbalance, right? So imbalance price right here before it traded lower. So we mark out again. We have this high, and you would like to mark this one, but then price will trace backwards. So you can mark this one, and price trade backwards to 50% level. Price retrace backwards to 50% level right here, and you could still say you want to choose this one. Price retrace backwards to 78% level, and which is what an area where you're having a fair value gap. So either it's retracing back to a fair value gap, or it is in confluence with the Fibonacci level. So we mark another one. We have this high, and we have this low. Price retrace backwards to 50%, which is balancing the gap. We have this high, we have this low. Price retrace backwards to 50%. That's fine. We have this high, we have this low right here. Price spiked into 78% level. We have this high, we have this low. So price violated us, and that violation gave us a break of market structure, right? So that break of market structure, what is responsible for that? We can see that we have another block printed for us right here. Okay, but most of us would be marking this valid. Alright, but then you can see that you have a stop hunt, and you can see the sell candle responsible for that before the change of character and the structural break. But probably running down to the 1 hour time frame, you might get to find an area other block, and which is it right here. Right here, this is our other block. So price traded into it, and it rallied higher. So the first thing it did was it break this high, and it's kind of like its accumulated price right here. All right, before it traded higher, it trades backwards to imbalance. It differs for the change of character and a break market structure. So it traced backwards to an area supply right here before it rallied higher. So we'll be going back to our 4 hour time frame so that we can use our Fibonacci to start marking them out. So we use our Fibonacci. We have this low right here, and we have this high right here. So we could use this low right here. So price you trace backwards to 50%. Probably if we run down to the 2 hour, we will see that this is a swing low. This is where the expansion started. We have this high, we have this low. So we'll mark them high. So price you trace backwards to 50% level, which was in confluence to having a fair value gap. Alright, so price we trace to it, and we ride higher. We mark another one. We have this swing low right here, and we have this high right here. Price retraced to 50%. It just wicked through it, and while it wicked through it, it grabbed liquidity from this low and traded into a fair value gap, and we now see rally higher. And now we use a Fibonacci again. We mark this low right here, and then we mark this high right here. That's our new swing highs and lows. Price retrace backwards to 61% level, and we are having it retrace backwards to fair value gap, balancing the price. And now we are now having a new swing highs and low. We have a new swing low, and we're expecting it to say swing high when it starts to retrace. All right, but in confluence we are having another block right here, which was responsible to give us a break of structure. So we're expecting price to retrace backwards to the other block. And remember, our target is a relative high right here. Our target is a relative high. So I hope that this helped so that you can use your Fibonacci in confluence to your daily range, and you missing entries and stuff like that, you use the Fibonacci to watch where price you trace to in your Fibonacci and find a confirmation entry to execute your trades. And take note of the shift in market structure, and also areas of stop hunt plus a break in market structure. So to them, till next time, stay safe.